Hello, I am Lisa J. Stocks. Thank you for tuning in to this week's Stock Talk episode.
The champ is here. The champ is here. The champ is here.
I appreciate the support. So let's get started. Everyone says they want a dip until the dip shows up. Last Sunday, we had a live stream talking about how the market had been going up for 9 straight weeks. And now we got to the 10th week and things have changed. The market has come down. You guys asked for a pullback and you got it. Those of you that were asking, Lisa, are you still investing? Should we wait for a pullback? I hope you were ready and prepared and took advantage of it. And I was watching the market on Friday and I was watching and I wanted to share earlier on in the day an update, but I was waiting and waiting and waiting. And, it was one of those days that I definitely knew that I was going to put a little extra into my investments, not just my zero point 0.1 shares of SPMO. And so it wasn't until 3:21 in the afternoon that I finally posted some details in the Discord and to my channel members of some of my investments that I've been working on that were severely, significantly in the red. And so these are a few of the ones that I shared that I was going to be adding a little extra to. Again, thank you, KG, for stopping through. Appreciate that super chat. KG was ready for the dip. Of course, KG was ready for the dip. And because of your mentorship, because of being a part of the community, I was ready for the dip. I was ready to share as a crown trader with everyone, give that encouragement because there are going to be red days and I have survived many of them over the last few years. And if you know, I've said it many times before, wealth is built in the red. And so we have to be ready for that. And it is what it is. It's a part of the process. Investing is truly a roller coaster when you look at the ups and downs. And so you have to take that into account. What level of volatility you want to have to endure when it comes to building your portfolio. But as always, the message around here, I want us to all be investing. There is the right investment choice that will fit your style, your needs. And let me take a second to shout out Vincent Pascal, longtime channel member, huge supporter of the channel. Happy Sunday to you also, Vincent. All right, so let me take a quick look at the chat. Daryl, thank you for tuning in. Thank you for being a mod. I have a remaining 12K to invest on the 10th. Okay. Daryl has a plan and a strategy in place and a good amount of money to get deployed. I was ready for that dip on SPMO. Yes. And we can't turn back the clock. All we can do is move forward, and I'm going to keep on building. And that's one I definitely kept on going with. I think I'm up to 195, so closer to my 200 share goal, little by little. So we got to buy the dip. We got to buy the dip on M. On M? I don't know what M is. Okay. Let's see. Let's do this. I am like number one. Thank you for the update, guys. Make sure to hit that like button as y'all come in. So I want to get to 50 likes in the first 10 minutes. Let's see if we can do it. There's about 37 watching already. So make sure to take a second and hit the like. Now, 10 weeks up, 9 weeks up. Now, this past week, things turned around and everything was cooling off. Nvidia, Microsoft, Apple, especially on Friday. The market was dropping, like I said, hour after hour. And so it wasn't until late in the day that I finally said, yeah, I'm going to get in here and finally do my little extra. I did some investing in the morning, but I revisited some of these investments later on in the day. And let's see, what are we going to talk about here? People say the market is too high to invest. When it comes to investing, I'm not taking any time off. It's like I was saying last week, I'm not taking 9 weeks off of a stretch. I'm gonna at least stick to my minimum plan, but I do like to have cash on hand so that I can go heavier when we have these pullbacks, when these opportunities come. That's when I incorporate my limit orders that I can have set and sitting and waiting. I've had at times I've had limit orders sitting for weeks. And if I didn't need that money accessible for trading or something else, I let it sit. And sometimes I was pleasantly surprised when actually I was able to pick up full shares at that price that I was hoping would come back around. So it's a way of going about it. There are ways to be strategic, but I encourage you, especially those that are need that discipline to automate a portion of your investments so that you're always staying on track to build and not being so stressed out about timing the market. When we look back, or even if we don't look back, when we think about our entire investing journey, these little 4, 5, 6 month snapshots are not going to mean anything. We're not going to remember years down the road that we caught some bottom when we were going through these ups and downs related to the war, related to tariffs, related to whatever is going on when it comes to the economy. So when others are fearful, be greedy. I am very hungry. I see you, the one. I see you over here commenting. That's the way to be. And so I hope that those of you that were waiting for the dip got started on Friday, have your plan on how to proceed this week. If you did, make that choice to hold on until you saw the market come back down again. But it definitely came down, and I bet I definitely took advantage and picked some more shares. So, guys, let me know in the chat what questions you might have. I will be taking time to look at them. Last week I enjoyed the questions that came in about the 401ks and different strategic things that I definitely have been sharing here on my journey. I think it was David who had that question last week. But I have upcoming videos on some different ETF mixes. I'm going to touch on a zero funds over at Fidelity, which I don't think I've ever done a video about, but I'm going to give a comparison video and let you guys know why I've not opted to go with any of those funds over at Fidelity. So be on the lookout for that. But as always, I'm on a journey to build when it comes to adding growth and momentum into my portfolio. Those are my main area of focus right now. I feel like I'm good with my FXAIX. I'm good with those basic core investments, and so now I'm just holding those, allowing them to grow. I know it was a rough week, but it doesn't bother me. And like I said, I've been investing now for several years, being hands-on. I look at my portfolio like every day, so I'm definitely in tune with it. Now, looking back to the comment that I had up when we got started here, that I put on my community page the other day, my comments were varied. Some people definitely noticed the dip. They were like, exactly. I added. I hate dips. My portfolio only goes up when the market goes up. David, of course, all of our portfolios only go up when the market goes up. But I also like Key's comment here, and she said haha, I didn't even know there was a dip. I just stay consistent. And there's nothing wrong with that. She is a true investor. She just, paycheck or on her particular schedule, she sticks to it and didn't even realize there's a pullback. She knows what she's invested into. She knows, she has her standards, she has her goals. And so she's just going to keep on going, whether it's a red day or a green day. And just saying said one of my accounts took an 11K hit yesterday. And yeah, it feels tough when you look at it in the second. One of my portfolios was also down about that much. But that's what's going to happen as your portfolio grows. When we have the pullbacks, they're going to get to the point where they are going to be tens of thousands of dollars. But that's what I want for us. I want us to be building six-figure portfolios. So when those days come, you're gonna see those unrealized losses when it comes to your portfolio. But remember, don't be shaken out of any good positions because of a pullback. Have an understanding of what's going on and what is going on. Let's talk about that. What's been going on? What headlines led to some of this impact when it comes to the stock market this week? So we have inflation at a 3-year high. It ticked up, and this is why the market gets shaky. We've all seen still struggling with those high gas prices. Americans are burning through their savings because we're seeing, there's just struggles across the board when it comes to our groceries, our bills. There's no ease. And so what is happening? We're relying on digging, not being able to save, digging through our savings, relying on our credit cards heavily. So guys, let me know your thoughts. Should should I sell out of my 401k? KG, KG, and anyone else who ever has this type of question or thought, let me tell you, one of the reasons why I have what I have is because I have never touched my 401k. I've told this story before. One of the first times, I started working in my late teens, about 19, I was full-time employed, contributing to my 401k. In all of my years of working, I never took a loan. I never decreased the amount that I was contributing to my 401k. I never stopped contributing to my 401k. And even when I was in an underperforming target date fund, it helped me to get to where I'm at today. And so I was going to say, when I was pregnant with my daughter in 2007 going into 2008, which was a rough time period. And I wound up staying home for about 4 to 5 months in total. 2 months before she was even born, I had to lay down here. I wasn't hospitalized, but I was here laying down. And I think that was the first time in life that I said, I think I need to, because I wasn't going to be getting 100% of my salary. I was going to be on short-term disability and only getting a certain percentage. It's the first time I ever thought I'm gonna not contribute to my 401k and my credit union. I'm gonna stop saving and investing. And even then, my family said, don't do it. Don't do it. Let's see how it goes. And guess what? I made it through all those months, getting my partial salary, and I made it through and didn't have to touch my account. Now, have carried some debt during those times? I've done everything, guys. I'm not saying, when I talk, I've been through it. Siding, windows, every car repair that you can think of. I have been through it, but I'm telling you, do your best to have your credit established, have a plan, have savings, have emergency funds, have sinking funds for different things that you know are going to come up, so that you are never looking at your investments, tapping into them before the time that you truly wanted to, because you're only going to be cheating yourself. And I've done a video about this saying, like, because people sometimes say, you know, I ran into whatever issue and I wind up taking $10,000 out of my retirement account. And I went into the investment calculator and I said, no, no, no. I want you to really think about this and think about it the way that I think about it when I hear you share these type of stories. Was that $10,000 on track to be in 15 or 10 years from now? So 15, 10, 15, 20 years from now. And so you interrupted the power of compound interest by taking that money. So never think of that as a $10,000 um, withdrawal, because it was on track to build and grow. And you're denying yourself so much more than 10K in the long run. So I say all that to say, do everything that you can to have everything in place so that you're not looking at your investments. Should I sell out of my VOO and SPMO? It's down 2% and I'm scared. I've gotten questions like this from people that were dead serious. I know KG is not, but I've had to take the time to console people about a 2% dip on a quality investment. You have to make sure. Now, Keenan often talks about wearing certain hats. And when my daughters were little, they had this Barney book. In every page of the book, Barney had a different job. He was he was a railroad conductor and he was a chef, and every job entailed a different hat. You have to know when you are ready to put on your investing hat and put on your trader hat. When it comes to investments like VOO and SPMO, that is investment. Those are just buy and hold. Listen, I don't even want to think about the day that I have to sell my S&P 500, my momentum ETF. I just want those to be on track to make more money and more money and more money. And way, way, way down the road, I'll have happen to them, but I'm not even thinking about that. 2% is nothing significant. So we were down double digits on 6 of the Mag 7 for months out of the year when we started 2026. So we have to be ready for that. It's just a matter of, what are you invested into, and is it on track for future growth? Will it recover? Let's see, let's see. I have investments that can come to the rescue if I need them. It's in an emergency break glass. If I would not use the consumer debt, emergencies are other investments that need a capital infusion. Okay, okay. Thanks for sharing, Daryl. Uh, looking back. I'm sick of leaving money in my buying power for time. I suck at leaving. I suck at leaving money in my buying power for times like this. Sad face. Okay, okay. That's okay. If you're sticking to a regular investment plan, you're doing the best that you can, you know? And so I don't know what to tell you. You have to add a little extra that can be there for the times that you want to buy the dip. All right, so now let's talk about a few big names that, let's see, let's bring up the heat map. Yes, this is how we ended the week. Let's see, where is there some green? Drug manufacturers and insurance, a little over in utilities, but across the board, we're seeing lots of red, and we have to be ready. We have to be ready. We have to be ready for this. This is a part of the process. And so, Google, where is Google at? Down about 1%. When it comes to Google, this one is a company that is considering raising equity for AI infrastructure. And companies making moves like this, spending billions to stay competitive. These are type of things that when they do it, it's seen investors, the sentiment, gets impacted and the price of the stock gets impacted. But these are the times when you have to think about the long term, the projections, the future of the company. And so if there are dips on companies that you believe that they're making advancements, they're making strides to improve themselves for the future, then this is the time that you have to take advantage, wait for those dips, add to your positions, or hold on to your positions. Like I said, don't be shaken out, because we have to know that they are truly trying to make a way to invest into themselves and become even deeper in their AI integration and process for the future. Another company with news coming up for this upcoming week is Apple, and they are having their WWDC, their developers conference, and that's tomorrow, June 8th. And so with that, we'll see what's next for them. At some time, I think overall, they did end the week in the red too, just like everything else, mostly, but Apple down about 1.25%, but not as significant as some other companies like semiconductor names. So with this tomorrow, they're expected to show off new AI features. We know Siri needs to step it up a bit. New software updates, new hardware integrations. They do this every year. And of course, we've been waiting for Apple to make some bigger strides when it comes to AI integration. We know that they haven't spent as much as some other companies. And so a lot of intelligence upgrades across their ecosystem is what we're always hoping for when it comes to updates from Apple. But however long it takes them, it's a company that has a huge fan base, and people just love their products. They know when September comes around, they're going to have an influx of people ready to come upgrade their phones. So, what are your thoughts on the developers conference? Have you ever watched it on streaming on here on YouTube, or are you interested in finding out what new features are coming? It's definitely an investment that I've been holding, and not had the gains as significant as others like Google, but never has not disappointed. I'm up about 100% when it comes to my Apple investment. And when it comes to investing, I do invest into crypto also. And so that has also had a significant pullback, dipping to lows that we haven't seen in some time. And I make sure to, with everything that's in my portfolio, whether it's, my growth stocks, my crypto, I'm creating the balance that I'm comfortable with. And so seeing crypto come from 125,000 to dip below 60, it's tough to see these moves on your portfolio within a short time frame. With crypto, much more significant than we're going to see with a regular investment. But a company, not a company that we can more easily have an understanding of the fundamentals, the earnings, everything that's going on with them. Are they selling some of their shares? Are they trying to acquire another company? But it's something that I am still holding. Don't give updates on my crypto very often, but I have XRP, Ethereum, of course, Bitcoin. I have FBTC, and it follows liquidity. And when inflation rises, it's going to be impacted also. Now, guys, let me know if you have any questions, comments, any investments that you guys would like to look at in future live streams or videos. So let's take a look at where we're at with the S&P. This is where we left off the week at about 73.83. But, you know, like I said, we got to think long term. Goldman just recently was saying that, you know, they're setting their price target for $8,000. So this is an investment that I have exposure to, this indice, through my FXAIX as well as VOO when it comes to my portfolio. These ads popping up. Let me see. Can't find my article on it, but speaking of the S&P 500, I did see an article recently and it was talking about new additions. It's not officially announced, it's going to be out very soon, but a new addition that should be coming to the S&P is going to be Marvel Technology, and that's one we've definitely seen in the news a lot. It's had an incredible run recently. Let's take a look. Here we go. So Marvel Technology expected to be added into the S&P later on this month. And even one of the best performers recently was down nearly 17% as we ended the week. And let's see, year to date up 210%. So when companies like this are added into the S&P, those index funds are forced to buy up shares, and that should be an extra added boost for them to create in the long term. But in the short term, you know, we might see that price pop when that date comes around, because of all of the funds having to add it in. So guys, how do you go about incorporating S&P into your portfolios? Like what is your go-to or favorite investment to get exposure in that way? I'll tell you, FXAIX, I'm glad that I discovered that. I, in retrospect, might not have gone as heavy as I did, but I'm glad that I was able to get out of a fund that was nearly 0.9% and get my money over to Fidelity and have it there, secure, building, growing, getting that quarterly dividend, reinvesting, and just being able to grow and not stress me out, but giving me that growth and stability that I want. Okay. So CSWC, is that a ticker? I'm not aware of them. Hood may get added as well. Okay. Yeah, I think Hood has been one that has kind of was expected to be added in past updates, but just didn't quite make it. But with them using with this administration and the connection with the Trump accounts for the children, as well as the retirement accounts for adults potentially, is causing a huge amount of attention around that company as an investment, around that brokerage. Hello, Nemo. Thank you for tuning in. Your green thumb. Your green thumb. Are you still here in the chat? Hi, I need help. I need help investing. Where can I start? You you have to let me know. I can ask me the question. I definitely have a ton of videos. I encourage everyone to make their top priority when it comes to investing the to be retirement. That's number one for me. Let me know in the chat if you disagree with that encouragement. I think you need to prioritize that so that you are able to take care of your older self. I was just looking at, I shared it in my story on Instagram. I believe the person was 84 years old working at the movie theater, and someone saw them, and someone saw them and started a GoFundMe and was able to raise a huge amount of money in order for them to hopefully be able to retire. But these are the things that we need to get ourselves prepared for. Everyone is not going to be saved by some huge GoFundMe. If you truly do not want to be working into your 70s, we cannot be reliant on Social Security. Does everyone in this chat even know what their if you were at retirement today, age today, what would your Social Security amount even be? Most of us don't know. And because of the way that things are going, there are projections that even the number that you see today could be potentially decreased by a significant percentage. Say what you're seeing now, if it's 30% less when the time actually comes around, you know, it seems clear to most that are in tune with their numbers that they're going to have to be so much more reliant upon being able to draw from their own investments in order to supplement anything that they might have coming in as far as Social Security or a pension. So we have to be ready for that. We have to get our bills down. We have to potentially pay off our homes and get ourselves on track for the future. And so I say all that to say, your green thumb, step one for someone, I would say, you know, get a handle if you've worked in past jobs, get a handle of those 401ks or investments that you might have from previous jobs. And then going forward, open up a Roth IRA or an account that suits your needs and just keep on building. And there are definitely investments that are not complicated. You can set up something, automate it with a brokerage like Fidelity. And I definitely have videos and I share about this all the time. So feel free to ask questions and I can direct you to some of those videos if you're interested. Do you own any covered call ETFs? I do not own any covered call ETFs. My ETFs are you know, SPMO, VTI, VOO, SCHD, those type of things. I do options trading, but I don't have any, you know, SPYI or anything like that. Okay. All right. So Daryl is in a position where he plans to invest all of his Social Security income, but that's what having multiple streams of income can allow for. I looked it up last month. I got more work to do. Oh, you looked up how much your Social Security is estimated to be? All right, all right. So I hope you share a little bit on that, David, a short or some information, because I think that's great knowledge to get out there of, you know, how where you go to get that number. And back in the olden days, they used to send us a yearly statement in the mail, but stopped that some time ago. I think mostly due to security of our information being mailed out. Does anyone remember those statements that we used to get in the mail? Retiring early via investments was the goal. Is the goal. Yes. I have a 401k, a 401a that I can collect in 3 years. Okay. Okay. So, it's not just about having an investment account. It's about knowing what you're investing into, knowing the performance, having a good understanding. Because I just saying that I'm a part of my 401k, I do that. It's not sufficient for me. It I encourage everyone to have a standard, have a more detailed understanding, so that you're not leaving any money on the table, so that at the end of the day, at the end of the road, when it comes time for retirement, you know that you really were maximizing every dollar. And so these brokerage companies are not there. They're not doing it for us. That's not a part of, you would think that that is their job, but it truly is not. You have to get out there and advocate for yourself. In my personal experience, I have definitely seen that. You can be in something very underperforming. You could just, accidentally answer one question and get into something that is just way too conservative for your age and your goals. And so you have to get out there and have a little bit of knowledge. And sometimes just being into the S&P 500 directly, a fund that is similar to the S&P 500, similar to an FXAIX or a VOO. It may not have that particular ticker, but as long as it has a low expense ratio, it tracks that index or another index like the Nasdaq, something that that is in line with the growth that you want for your portfolio. Then you have to just use that as your benchmark, and not necessarily just settle for being in the target date fund. And something else I often mention is the target date fund, you don't have to go with the one that corresponds to your retirement age. By going with something further dated out for someone, say 10 or 20 years younger than you, it'll give you a more aggressive mix. So just something I like to mention, not financial advice, but something that I have incorporated that has worked for me, and others, when I have shared about it, have kind of seconded me and said, yes, I agree. I've been through it. I have a testimonial that what I'm sharing is accurate, and they've seen it in their own personal journey. All right. That's a good point. Okay. And I know you're 3 years out, but you have to give yourself time, but take a look at what you're invested into, because there could be some changes, even if you are comfortable with making them for 1 year or a portion of your portfolio, to be on track to build and grow in a more significant way. But at the same time, be ready to shift into that preservation stage if you're going to be starting to draw from it. But you're not going to draw it all at one time. So you can still be making a plan that can have you on track for you to be in that still of a building stage. All right. So Vinnie Mac, also have some insurance when the market does fall. I always buy VIX 6 months out in case of black swan. It can help save you from some losses. Okay, okay. Okay, Emily. Um, I have just a small position of SCHD, and right now it's all of it is it's in a taxable brokerage account. I haven't shifted any of my tax advantaged account into high, into dividend focused investments. I've decided for now to stay concentrated on growth investments. SMH was one that I didn't mention, but SMH, SPMO. I have another growth mutual fund over at Fidelity, but I might try to. I think I'm going to incorporate something new. But I'm just working on that. So no, I have it right now. It's in my regular brokerage, but it's not a significant position. It's only maybe about 50 shares or so, because I'm not focused on trying to build up dividend and investments for income yet. So I'm trying to just get my portfolios to grow through growth investments, and then down the road, when I want or when I need, I will try to focus on transitioning into a way to generate income. Okay, I'm just taking a look back at the chat. Guys, let me know if you have any questions. I don't think I missed anything. If I did, please drop it again. But overall, uh, some individual stocks that I'm adding, I think they were in that list that I was sharing earlier. Um, yes, Microsoft and Meta are positions that I've been working on. AMD also. Uh, but this is the right fit for me. I try not to put too many individual stocks into my retirement accounts. I stick to more funds, but and I would say my crypto position is probably about 5% of my overall portfolio. But everyone has to do what's right for them, the right fit, because I you have to do what doesn't stress you. But I encourage you not to just be super conservative, especially if you are younger. There's a lot of opportunity, and for us to build and take advantage and truly be on track for a better financial future. I'm with you, Lisa. I'm still in super growth mode in my mid 60s. Okay, okay. Yeah, you are an aggressive investor for your age. You never talk about slowing down and getting all into SCHD. And happy birthday, Daryl, by the way. I hope you had a great weekend. Okay. So guys, let me know if you have any comments, if there's any investments or individual stocks that you would enjoy an update on, whether it comes to our live streams or videos throughout the week. Make sure to always leave me comments, like, hype. Make sure to support the channel. But there have been no tears shed this week with the way that the stock market has pulled back. I know that I'm still in the building phase, and so I take these opportunities to build even more. I'm in tune with the companies that I plan on holding long term. And if anything, when I think about my portfolio, when I think about my journey, I I can't think of a time where I said I over invested. It's always when it comes to when I reflect, I wish I had invested more. Are you guys like me on this? that when you look at certain investments and you're up 100%, 120, you see those gains and you just wish that you had allocated more money into them. SCHD is king. SCHD is a good quality investment. It's just not going to give me the growth that I want right now. I definitely have nothing against. I hold these type of investments, but for now, I've decided not to have all of my money sitting into Realty Income, SCHD, Main Street Capital. Yes, you get that steady quarterly on Realty Income and Main Street Capital monthly dividend payment. But right now, while I'm not reliant on that monthly dividend for income, it's not where I want to have a significant amount of my money. Let me know if anyone here is doing anything similar. Start investing as young as you can. Yes. Yes. So one day, Daryl, which is Fire, Dr. Ninja Turtle here on YouTube, he was saying that the first investment that he had a poll going on during his live stream, and he was saying that the first investment that a young person should be real estate. And I disagreed because I feel like you can buy a share of, not even a share, you can buy a fractional share of mutual funds, of ETFs, of quality companies that potentially could be around when these children are adults. My daughter, she has about 3 shares of Apple stock in her portfolio right now. I showed it to her recently. I was talking to her about it more in detail recently. She knows what she has in her portfolio, but we were just going over how to look at it. And I had made a post talking about it because, I just want to encourage people not just to keep on remembering that we can bring the kids along with us on this journey, that we're obviously buying them the shoes and the clothes and the gaming systems, but also at the same time, let's allocate some money into a fund. It doesn't have to be individual stocks, but I incorporate both. 80% funds for her and then 20% individual stocks. So you have gaming systems, you can have some NVIDIA. You have, you're buying all these material things, eating out all the time in the movies and the amusement parks and all those things. Let's put some money to investments also to show them it's not just about being a consumer, it's about being an investor. Lisa was right in thinking about children. Yes. And, and who knows down the road, the investment, if they are interested, for most likely, many do want to own, so that their investment portfolio could be a contributor towards buying their first home, investment property, a multifamily, something. CSWC, let's take a look. CSWC. I'm not finding this ticker that you put in here. Capital Southwest. Let me see if I can cut and paste it. Trying to take a look. Oh, I didn't realize. Can I type in this like this? CSWC. Yeah, I'm not finding it on the oh, it's not a I think I'm gonna look at it on my app. I thought it was a fund there for a second. But what is it about this company that has you intrigued? Can you share? Yeah, I don't really invest into companies that are usually this size. This is pretty much a penny stock. It's well, when I use the term of penny stock, I usually mean like $5 or less. But overall, this is a pretty small, uh, a pretty small company. Let me see. Oh no, I'm sorry. What? Yeah, I'm just not. I'm not familiar with this at all. Floating market cap is free float. I'm not sure the company this is. I'm sorry. I don't really have any insights to share in real time on this one. I would need to take a closer look. It has a 12% dividend, which is unusual for a stock. So I was curious. Don't chase those dividend yields. Look at the bigger picture when it comes to these companies. Is that sustainable? If I have the correct ticker in here now, um, if they're going to pay you out that dividend, this is on the 5 year. If this is the correct company, on the 5 year, it's down 16% over the last year, up 8%. So yeah, that high dividend is it's not going to give you your a potential of that dividend. It doesn't mean anything if you're not going to be getting any share appreciation, and dividends are not guaranteed. When I think of a company that I'm going to rely on for dividends, I rather a dividend aristocrat, a dividend king. I've gotten to the place with my portfolio where I want quality. I want quality, and and sometimes, yes, I trade things that are not potentially a quality investment. That's why there's trade status when it comes to my portfolio. Now, as far as creating dividend income for myself, I'm not gonna put I'm gonna have my stop loss on with anything that I think is potentially speculative, but I'm not going to be reliant on an investment just because it has a 12% or 5, 6, 7 is even significant dividend today. No, I'd rather have if it's going to be an individual company or an ETF like an CHD. That's where I'm going to rely on for stability and the quality that I'm looking for. I'm definitely not going to be uh, drawn into something like this because of the dividend or the 20 something dollars share price. if I don't feel that it's the right fit for my portfolio. And at a glance, I don't think it would be for me. I'd rather have something with a third of the dividends, and even, not significant growth, but it could be more in line with what, my goals are. And most likely, I do have realty income in Main Street, which, it's a REIT and a BDC, but I haven't incorporated. I've never incorporated any individual companies like a Coca-Cola or Verizon or something like that for dividend income. And that's just my personal preference. But like I said, if I was going to, I would want it to be a company that has proven themselves a significant amount of years of paying that dividend and raising that dividend, because 12%, whatever the percentage is, today, 10 today is one thing. A short period of time is one thing. 10 years, 15 years, 50 years straight of always paying a dividend or increasing their dividends, that is different. That is different to me, when I'm going to be doing my research and making my choices of what I'm going to put into my portfolio. Makes sense that you mentioned actual share price holds no value long term, no matter the dividend question. Yes. And, and companies don't have to continue paying a dividend. They can decrease their dividend. They can eliminate their dividend temporarily. Companies did that when we were going through, some companies did when we were going through COVID. I've held my shares of Disney when they weren't paying dividends for a significant amount of time, and then they reinstated it. And so, I've seen it happen. It's occurred in my own portfolio, but it was never a company that I invested into because of the dividends. And so, Simply Safe Dividends is a website that you can take a look at. And that would be a place where, if you've never taken a look at it or seen me reference it in my any of my videos, that might be a place that you can take a look at for something different. I have a sign in for this. No, I don't want to sign in. I wanted to show you guys, but I think, I don't know. I can't seem to find the listing right now. But you can try to take a look at it when you have a chance, for dividend safety scores of things that are more proven and, ranked in a way, because I think you can find a fit that may not have that significant of a dividend, but might be a better fit for something to hold long term. But I'm not a person that is encouraging you to be super conservative, but I think that sometimes people chasing those high dividends can put you in a place that in the long run, it isn't worth it. All right, so I'm just going to take a look at the chat. Oh, thank you so much. I did not realize that Larry Jones was here. I appreciate that. And also, earlier today, Keenan Grace and Vincent Pascal also stopped through and gave some super chats.
Thank you so much. We do greatly appreciate it.
I'm guessing I might have gotten a share somewhere that I did not realize today. Again, shout out to KG, my channel member Vincent for always supporting the channel, as well as Stock Up with Larry Jones. Hey, just stop by, just stop through, be blessed. Thank you, Larry. I will wait until insiders sell SpaceX for $30 a share. Then I will load up. Okay. I don't know how long that's going to take, but they're over here changing up the rules and letting people that have, bought it ahead of time be able to sell it more quickly. So I think that if anything, I will be getting my exposure through ETFs or just at least waiting the 6-month time frame for everything to get shaken out. Okay. Waste of money. I don't know what the discussion was at that time. It's not for me. Forget. Okay. Oh, the SpaceX IPO. Everything is not for everybody, and everyone, when you start your investing journey into something, the starting point matters. About 27 years ago, getting started, investing into Amazon would not feel the same as it would be 5 years ago as your starting point. If I was closer to retirement, would I have a different approach to SCHD? Yes. Yes, I would want a significant portion in something like an SCHD and other dividend paying investments so that I can rely on that income and know that there's not going to be significant dips when it comes to that portion of my portfolio that I want to be in the quote unquote preservation stage, as I call it, ready for me to be able to draw from it for income. So I would be thinking of it differently. I was ready to tap in. Okay, so one was sharing an ETF, VGSH, which don't think I've ever heard of. It's a short-term Treasury Index ETF for dividends only. It pays monthly. Okay. So I have 3 monthly paying dividend investments in my portfolio. SPHD. I'm not thrilled with the expense ratio versus the performance, but I do have some shares. I'm not inclined to sell them. And then my other 2 I've already mentioned today, Main Street Capital and the Income. So those are my 3 monthly. And then I have, SCHD and other growth stocks that just happen to pay a dividend, like my Apple and Google and even Nvidia. I think they were paying a penny and they've raised it to a quarter recently, which it doesn't sound significant, but that percentage of increase in one shot is significant. If I get wealthy, Lisa can manage my investments. No, Daryl, I want you to manage your own investments. And I want you to still be aiming to have that low expense ratio. We can meet on a quarterly basis if you want to have a one-on-one. If you feel that that's what you want to do once you're, so wealthy. AMD is half the price and makes way more money. AMD will be the most valuable company soon. Okay. my AMD, I was going to use, wound up not writing the post, but I was looking at AMD because that was one of my most significant gains from, I think, December to June. I had my investments, I didn't even have one share back in December. And then by June, I had added a few more shares and I was up about 126%. But after last week with that pullback, I think I'm only up about 100%. And so, I was going to make a post about it, just using it as an example of the longer you hold, the deeper you are in profit. When we have these pullbacks, when we have these weeks or days or, whatever amount of stretch of time when NVIDIA is down 6%, Taiwan Semi down 6, when all these things are impacting your individual stocks and your ETFs, you're not seeing it as significantly because it's not a newer investment to your portfolio. So a 6% drop, it doesn't wipe out all of my gains. When I look at my portfolio on the daily time frame, obviously I see this, I'm aware, I'm in tune, but I don't worry about it. And I take a look there, but then I shift back to my total growth of my portfolio and I keep it moving. And I always continue to share when I do my updates, whether, I always try to, if it ties to me showing my position in my update videos, I'm going to share my portfolio. If I'm down, if I'm in the red, I'm going to share that too, because that's a part of the process and that is a part of my true journey. And I want newer investors to see that everything is not perfect all the time when it comes to my portfolio. And so remember, the gains didn't come overnight, and you just have to work through it. You have to be ready. And I don't want anyone to be scared or intimidated by the process. Oh, Lisa, I'm fitting to be a hedge manager. Yes, she is. I will be there as I am an accredited investor. Okay. If I get wealthy, okay. All right. I think I'm caught up with the comments. All right. So guys, last call. Any questions, any comments, any requests on things that you want to see in the future? Let me know. If not, I'm going to be wrapping it up for the day. I seem to be home alone, which is disappointing, but maybe I can get going on those next videos. Make sure to, if you're not already, subscribe to the channel. Give this live stream a thumbs up. Come back, check in every Sunday at 3 p.m. Eastern Standard Time. Always feel free to leave me any questions, comments on any videos or live streams that you catch the replay on. Again, thank you so much to Keenan Grace for stopping through today. I think I might have, I'm assuming I got a share today because Keenan Grace here, and also Larry Jones. Always a shout out for Vincent for being a channel member and always supporting the channel. I appreciate y'all. And I will see you next week.
Stock it up, 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 stock it up. It's Lisa J Stocks. It's Lisa J Stocks. It's Lisa J Stocks. It's Lisa J Stocks. Stock it up, 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 stock it up. It's Lisa J Stocks. It's Lisa J Stocks. It's Lisa J Stocks. It's Lisa J. Yeah. Like, share, subscribe. Come learn about